Have you ever wondered what would happen if the US dollar wasn't the world's primary reserve currency anymore? This thought may seem far-fetched, but it's an intriguing question that's becoming increasingly relevant in our evolving global economy. The US dollar, as we know, holds a central place in the worldwide financial system. It's the currency in which most international transactions are conducted, and it's the currency that central banks around the globe keep as a reserve. This status as the primary reserve currency gives the US certain advantages, like being able to borrow money at lower costs and having a strong influence over global financial markets. This system, with the dollar at its heart, has been the norm since the mid-20th century. But as the world changes, the economic landscape is also shifting. Countries are beginning to explore alternatives, and new players are emerging on the scene. The question then is, how might these changes affect the role of the dollar in the global economy? Now let's delve into a recent development that might just be a step towards changing this status quo. In a significant move, China and Saudi Arabia have taken a step towards de-dollarization with a massive agreement. The deal, a behemoth of financial diplomacy, is worth an impressive 50 billion yuan. Within this substantial agreement, there lies a $7 billion oil purchase, a noteworthy element on its own. But what's truly game-changing about this transaction is the form of currency used for payment. Bucking the trend of the US dollar reigning supreme in international trade, the payment for this deal will be made in Chinese yuan. This switch in currency, though seemingly minute, is a key player in the shifting sands of global economics. It's a testament to the growing clout of the yuan in the international monetary scene. This deal is set to last for 3 years, but its implications may last much longer. This is not an isolated incident. China has been steadily building a network of currency swap agreements. In fact, it's been a strategic move that has been taking place over the last decade and is now more visible than ever. China now boasts a robust portfolio of 29 agreements with different countries, a testament to its growing economic might and strategic foresight. Now, the question that inevitably arises is, why is this significant? Well, these agreements allow for trade to be conducted in the local currencies of the agreement nations, bypassing the need for US dollars. This is a game changer as it marks a significant shift away from the dollar-centric global trade system, a system that has been in place for more than half a century. China's currency swap agreements span from Europe to Asia, Africa to Latin America, enveloping a wide range of economies, both emerging and developed. This wide coverage signifies the potential influence of the yuan in the global economy. It also represents China's intent to integrate the yuan more deeply into international trade and finance. But what are the potential implications for the global economy? For one, these agreements could potentially reduce the exposure of global trade to US monetary policy. It could also increase the diversification of currency reserves, providing a cushion against dollar volatility. However, this shift could also lead to increased competition among global currencies and possibly a shift in economic power dynamics. As China continues to push the yuan into the global marketplace, the landscape of international trade could change dramatically. So, what does this mean for the future of the dollar? The dollar has been the cornerstone of global trade for the better part of a century, but the winds of change are blowing. As China continues to ink currency swap agreements and establish the yuan as a formidable trading currency, the future of the dollar could be in for a shakeup. If the yuan keeps gaining prominence, it could mean a shift in the global economic order, with the dollar's dominance waning. This isn't just a concern for the United States, it's a potential game changer for economies worldwide. After all, the dollar's stability has long been a safe haven for countries seeking to protect their economic health. However, this doesn't necessarily spell doom and gloom for the dollar. It might just mean a new chapter in global economics, where the dollar shares the stage with the yuan and potentially other currencies. This could lead to a more diversified and resilient global economy. But the transition won't be without its challenges. For the United States, it could mean adjustments in monetary policy and trade relations. For other economies, the transition could bring uncertainty as they adjust to a world where the dollar is no longer the only dominant currency. In the end, the future of the dollar will largely depend on how countries navigate these changes. As the old saying goes, change is the only constant. And in the ever-evolving world of global economics, this rings especially true. As the world moves towards a potentially new economic order, the role of the US dollar may be less dominant, paving the way for other currencies like the yuan.